Jason, welcome to the show. How you doing?
Pretty good, Ameer. Nice to meet you.
Likewise, you and I connect. I don't even know how we connected. Actually, I started following your channel, Main Street, and your educational videos for a while, which I commend you, man. Great job on that.
Thanks. It's over a decade of hard work, taking over 500 books on business, investing, the economy, thousands of articles, interviewing over 500 experts, and then condensing it into easier to understand information for people on Main Street.
Well, talking about easier to understand information, let's talk about what's happening currently because lots going on. We have obviously the pandemic is happening. We have oil wars. But you and I, before the show, were talking about this. Anybody who was following this space could see exactly what was going to happen. It's not like this was a black swan event where it's like, oh my God, I'm so shocked at what's happening to the economy. So what's your take on this?
Yeah, the mainstream financial media is making it like it was a black swan, but in actuality, the global economy, in terms of exports, whether it was South Korean exports, Germany, they were in recession for at least 6 months. Germany was in recession all of 2019. South Korea was having really bad export data for really since the end of 2018. And a lot of it had to do with how much the Chinese economy, the real economy in China, and the data is tough to get, especially from the Chinese government, the National Bureau of Statistics. Occasionally you'd get some information about stagflation, higher food prices, but from reliable sources like Leland Miller, China Beige Book, he's done interviews on Real Vision TV and also Hidden Forces podcast, two great free sources for your listeners. The Chinese economy had really started to stall. The tariffs, the trade war that Trump started, China was totally caught off guard, and a lot of Chinese manufacturing was uneconomic, let's just say. And so their economy of manufacturing a lot of stuff and for profit. Now, the Chinese government and the Chinese banking system was subsidizing and bailing out manufacturers. Not all of them, and the bailouts were different. It's been going on for a while, but the bailouts had increased. But a lot of the Chinese economy had shifted over the last 10 years from manufacturing things for a profit. And really the last 5 or 6 years is when things really accelerated into paper trading, wealth management products, dummy corporations by local government financing vehicles that started dummy corporations and then overborrowed. And the Chinese economy had basically, Peter Schiff and Jim Rogers, very pro China, very pro long-term China growth 10 years ago. So 10 years ago, the Chinese economy had very little debt. There was a very high savings rate in the Chinese economy. And then in the last 5 or 6 years, that has totally been flipped, where the amount of speculative real estate in ghost cities in China, and the credit in China and the lack of savings, it's just all exploded. It's gone exponential. To give you some examples, Ameer, you and your listeners, the amount of credit in the Chinese economy, it went from, I think, barely 5 trillion in total credit in their economy about 10 years ago. And they had $4 trillion at that time in foreign exchange reserves. So they had a lot of reserves. There was a very high savings rate, about 40% for Chinese households at that time. And then the credit over only a 10-year span went up over 8x in the China's economy. And the average salary for a lot of people in the Chinese economy is only, there's more affluent people in China, but there's also a lot of poor people in China, and their version of the middle class is not making the same salary as people, your listeners up there in Canada, people here in the US, and people in the European Union. So China's economy was sputtering long before the global pandemic. And the global pandemic, Ameer, I think, in my opinion, was really the last thing they needed, because they were already having immense economic problems. The Chinese banking system started to melt down in May 2019, and there was at least, from what we know publicly, there was at least 5 or 6 bank failures in a 2 or 3 month span. And I was doing videos about this on my channel showing the different stories. The bailouts were just getting crazier and weirder and larger. And it got to a point where one of China's 2 largest state-owned enterprise banks, China Construction Bank, I think this was August 2019, but the People's Bank of China, their central bank, and the Chinese government ordered this large, massive bank to bail out Hunan province for $300 billion over a 5-year span. And that would be the equivalent if the US federal government asked JP Morgan to bail out the state of Illinois. for the coronavirus. So China was having really bad banking system problems, interbank lending problems. They were dealing with a lot of stuff, bad things in their economy. And the global economy was suffering long before the coronavirus. And the coronavirus was really, in my opinion, just the knockout blow.
Yeah, I have a interesting thoughts though. So two things. Number one, earlier in the year, China was pushing hard in Hong Kong. Would you say one of the reasons why is because Hong Kong is that satellite exchange that they can have liquidity or access to USD greenback?
Yeah, but also, Hong Kong has some freedoms. So Hong Kong people protesting, that makes Beijing look bad. The puppet politician that they put in Hong Kong, the protesters, that makes Beijing look bad. So Beijing was looking bad, but yes, you're correct. Kyle Bass has talked about this a lot. The Hong Kong banking system is used for money laundering. Also, Hong Kong banks have a real problem there. Kyle Bass has talked about the dollar peg might break, and they are extremely levered, the Hong Kong banking system, both to Hong Kong real estate, high values, and also real estate loans into mainland China. So that's really the problem with the Chinese economy, is how much credit is in the economy, the dollar-denominated debt, and the dollar-denominated debt. And this is another big problem why the coronavirus is creating these massive interventions by central banks. All this dollar-denominated debt, a lot of it was from emerging market governments, emerging market private companies, and well over $1 trillion of it was in China, especially from the Chinese real estate sector on speculative real estate construction. So Jim Chanos has estimated that about 20, depending upon how you measure it, about 25% of China's GDP was solely on speculative real estate. So they have their housing bubble to what happened in the US from 2002 to 2007. The mentality in mainland China from a lot of people, speaking to a lot of people, was that real estate prices would not be allowed to go down, very similar to the attitude Americans had, except that the people in China were saying that the government wouldn't allow housing prices to go down. And there was some anecdotal evidence that the government had canceled some sales in some different provinces that were below different levels of the Chinese government, had canceled some sales below market. But a lot of that credit in the Chinese economy was tied to speculative real estate.
And the real estate was they're propagating that to keep up with their so-called 6% GDP growth that they promised everybody.
Yep. So it's all about infrastructure. It's all about construction, and a lot of the real estate building, after they had already built out a lot of the there's only so many infrastructure projects you can do. So now it's just getting excessive. There's bullet trains in China to tier 3 and tier 4 cities, a lot of them, not every single one, but a lot. So there's only so much infrastructure projects you can do before it becomes excessive. The Japanese government ran into the same problem with their economic central planning. I know you follow the Austrian school, so you can misallocate capital if you're doing infrastructure investments, if you're subsidizing your manufacturers. Peter Schiff would disagree with me on that. I respectfully would disagree with him about that. So capital can still be misallocated on infrastructure and with manufacturing. So manufacturers can be subsidized.
It's called the unions and the back shady deals. It gets misappropriated the most.
Do you think there's unions in China?
Well, we call them unions here. You can call it organized, official organized parties of the CPP.
Well, the thing is, in China, if you have a union, you start protesting. If you march with picket lines, there we go, picket lines. We're seeing some protests now over rent is too high because the Chinese economy has imploded from a bunch of different factors before their coronavirus and now afterwards. They've done a lot of different bailouts, a lot of capital injections. I think they were injecting hundreds of billions of dollars in just a month or two, but that was going on for most of 2019 too. I did a video on my YouTube channel showing a lot of the different types of bailouts. There was at one point, according to the New York Times, in August 2019, there was an extensive article interviewing a bunch of Chinese business owners. There was $200 billion worth of IOUs circulating in the Chinese economy, that these state-owned enterprises, the local and city governments were not paying teachers, were not paying government workers. They were getting paid maybe a couple months late, but they weren't getting paid any interest for waiting. So it was a mess. The Chinese economy was a mess thanks to Trump and the tariffs and the trade war, and also stagflation on higher food prices, especially pork and some vegetables. And then we had ground zero in Wuhan. So that made things a lot worse.
How do you think this is going to affect him with the, if you follow Brett Johnson's theory of the milkshake theory, so short term, medium term, US becomes a liquidity king, it's been the liquidity king or the king of currencies since World War II. How's that going to affect China?
Okay, so I agree with a good amount of what Brent Johnson says, except I think a lot of it has already occurred. So Brent Johnson has said that all this flight capital from China, from Europe, from emerging markets will all come here to the US. Well, what happened in 2019 with our stock market? If you look at a chart of Apple and charts of Boeing and other companies before they crashed in the last couple months, those stock charts were going parabolic. Meanwhile, the earnings were horrible, were mediocre or horrible. So I think we already had over the last 2 years, a lot of what Brent Johnson described. The problem is the dollar index didn't get to 110, 120 or higher. And that's because these governments, whether it's the Treasury departments or the finance ministries of these different governments or the central banks like the Federal Reserve, they're all trying to manipulate their currency exchange rate or devalue their currency. So they don't want most people to notice. For right now anyway, I'm in the dollar tug of war camp. So I am neutral on the dollar against the other currencies. I think all the currencies are garbage, but I think most professional money managers, they want to retreat into, still view the dollar and US treasuries as safer than other countries on a relative basis. But overall, the Fed has intervened massively. There's been an unbelievable amount of trillions. One of the common themes that I was talking to you about before, when we first met on Twitter, was rules changes.
Yes.
And this is something your listeners are really going to have to pay attention to. It is really tough even for financial professionals because of all the different rules changes. There's so many of them. So I'll just give some examples. So it is illegal for the Federal Reserve to actually buy anything but U.S. Treasuries and mortgage-backed securities. That's it. That's all they're legally allowed to buy. So what did they do to get around the rules, to move the goalposts, to have Lucy pull the football when Charlie Brown was trying to kick it? They created a dummy corporation similar to what Enron did. I interviewed Danielle DiMartino Booth, Reserve, recently, and she said basically it was illegal. So they created with the U.S. Treasury coordinating a special purpose vehicle, which is a dummy corporation. And then they went and they started financing. So technically the US Treasury owns all these things that the Fed has been buying. So these municipal bonds, these investment grade corporate bonds that are not going to be investment grade for much longer. There was $150 billion in investment grade corporate bonds that were downgraded recently. You have junk bonds, you have junk bond ETFs, you have leveraged loans, you have collateralized loan obligations. The Fed's official balance sheet, Ameer, is up $2 trillion in a very short amount of time, but that's not the real story. The real story is what Danielle DiMartino Booth and I were discussing, how all the shenanigans, the real shenanigans, and many, many trillions was off balance sheet that people will not see if they go to the Fed's different websites and look at the official balance sheet. So even though the official balance sheet looks like a hockey stick, the reality is much, much worse. Now that's one side of it. So you have all these bailouts, and you would think the dollar would be devaluing quickly and collapsing. And this is why I'm in, for now, the tug of war camp, because there's two powerful forces. You have the Fed and the Treasury, President Trump administration, who all want a weaker dollar. If the dollar rises too quickly, like when it got to 103 on the dollar index, I think a couple weeks ago, and then they just panicked. And there was all these announcements. I called it another day, another bailout, fast and furious rules changes. And on the other side of that is how much dollar-denominated debt, and this is what Brent Johnson is talking about. When you have all this dollar-denominated debt, you need dollars to pay it back so you don't default. So maybe you can't pay the whole thing back, but it's like your credit card bill, right? Or your mortgage. If you don't at least make the minimum payment, you're in big, big trouble. So people need dollars, but the problem is that the global economy is not functioning. There's a cash flow problem. So you don't have American tourists, you don't have American companies buying goods and services outside the US, and those foreign companies getting those dollars, those other countries that relied on tourism getting those dollars. So that's why what you're having now on the other side of this, and that's why it's a tug of war, because that's a powerful force on one side with the demand for dollars to prevent default. on that 12, 13.
But why wouldn't I, as an investor or as a company, go to another country? Like, for example, the US dollar versus Canadian dollar has a premium, or even better example, US dollar versus Australian dollar, where I can get a premium on all assets in that country.
It's a good question. So normally what other private foreign companies did was the investment banks or banks that they borrowed from were offering them less interest. So also the loans were taken out. George Gammon was on your show. He talked about this extensively. I listened to that interview. Good job. He said that a lot of these loans were taken out when the dollar index was actually really weak and they expected that trend to continue. So this was a monumental screw up by foreign governments and foreign banks, foreign private banks and foreign private companies. So this was betting that that trend of weak dollar would continue. So that's part of it. The other reason is dollars are more liquid. We're on a dollar standard. Mm-hmm. So if in other countries, dollars are more easily accepted than other currencies. So if you're in Japan and you have Canadian dollars, the odds of a company in like a taxi cab driver taking Canadian dollars probably pretty
Nobody
low.
wants Canadian dollars.
Well. I'm sorry I singled out your currency, but if it was Australian dollars, if it was euros, your Japanese taxi cab driver, if you're going to tip him, might not accept that. But if you have US dollars, he might say, okay, fine. So US dollars are kind of viewed, we're on a globe. That's the best way to think about the current system. The current system is heavily flawed, but it's the shitty system we've got for now. So we're on a dollar standard, and the US takes advantage of that incredibly. So you have two powerful forces here. You actually have the Fed, the Treasury, President Trump administration all want a weaker dollar. If the dollar gets too strong, they want to weaken the dollar, which means they might purchase more and more assets to try to get the dollar weak. And the other side of it in this tug of war that I view of things for now. Now, eventually this rope will break. I think the Fed will ultimately win because that's what history says. Eventually the Fed and the Treasury will win. They will weaken the dollar, but we're going to have probably a lot more volatility in the near future with currencies. The other side is the amount of dollar denominated debt. But what most financial professionals miss is the extra dollar derivatives. So these are dollar liabilities. This is the currency of adjustable rate mortgages. These are called forward dollar swaps. These are what countries did so they didn't have to blow through their foreign exchange reserves. So have you ever done currency trading?
Forex? Yeah.
Okay. So if you're looking at the fundamentals of a country, right, with the currency, you want to see if the country has a lot of foreign exchange reserves. You want to see if the country is running, if they have government budget deficit problems. You want to see if the country is doing a good job managing government finances, if the central bank has foreign exchange reserves to defend the currency and the exchange rate. And normally, and we know this through history with the Asian tiger crisis, the Mexican peso problems, other currency crises, normally when these countries that are running dollar pegs or other currency pegs, when they blow through their foreign exchange reserves, so the foreign exchange reserves go from a respectable amount, the currency is not moving around violently in a volatile way, to all of a sudden the foreign exchange reserves are the treasury departments in these different countries are running through their foreign exchange reserves, defending the currency exchange rate. And then currency traders are starting to question whether the currency peg is going to break. And that's a lot what happened during the Asian tiger crisis. And then you had net capital outflows. So there was an enormous amount of hot money that came into Thailand and other Asian countries during the Asian tiger crisis. And then as soon as the foreign exchange reserves were blown through, people started worrying about the currency pegs, the government budget deficits, the finances, problems with dollar-denominated debt. This is an occurring theme here. This is why the Plaza Accord was done too in 1985, was Japan and Germany were having problems too. So the U.S.
So to refresh people's memory, the Plaza Accord was to reduce the value of the U.S. dollar.
It was a 50% devaluation that was agreed. Now, in exchange for that, so the U.S. did want to devalue dollar because all these people running these central banks, these governments, these treasury departments, they all kind of have the same playbook. It's all Keynesian or neo-Keynesian. They all think with a version of mercantilism the Austrian school would call it mercantilism anyway, that if they have a devalued currency, that's good because that benefits their economy for exporters. So if everyone wants to have a weak currency to boost exports, see, that's a problem then. So the US, you have Triffin's dilemma. You have all these other countries that want a weaker currency for exports, and then the US government wants a weaker currency too, but it's a reserve currency. So that's Triffin's dilemma.
Yeah, well, it's importing issues too. Like I'll give you an example. Since the U.S. dollar has popped against the Canadian, we have a lot of companies who have remote freelancers around the world, but they're denominated in U.S. currency. They don't want to take any other currency. But the Forex exchange for Canadian to U.S. is not even worth it anymore.
Not even worth the exchange rate anymore?
No, like if you're looking at the value that you get, it's like you can find the same type of value in Canada as opposed to now exporting that type of labor before.
Yeah, well, there's other competitive advantages besides just labor and currency. So Canada might have cheap energy at some point. I mean, you guys have
we do. We got cheap energy. Yeah.
Yeah, you guys have plenty of cheap energy. We'll see what the government decides to do with protecting your oil industry. Although Trudeau, he's a very radical environmentalist, right?
Oh, so, that guy, he's the best businessman in the world, man. Oh my God. Oh, it's ridiculous. So what do you see? Let's kind of reduce this or simplify it. How does this affect everyday working class Joe?
It puts more monetary inflation. It creates distortions in the global economy, in the supply chain, with all these currencies being devalued. So it creates misallocations of capital. It creates the Cantillon effect. So whoever is getting that extra currency, whoever is benefiting from the currency devaluation is not the average Joe or average Jane. So it's creating stagflation, I would say, and it's going to be a common theme in the real economy. And the government economic data saying there's no inflation is not going to reflect this. But people see this with their bills. So either your bills are going up, or when you go to the grocery store, well, now I was going to say going to the restaurant, but now I used to take that for granted. When you go to the grocery store or you order takeout or delivery from a restaurant, given the circumstances we have, you're going to be getting less portion of food. So you're going to get less goods and services for more currency. It screws over the average person by devaluing currencies like that. You get less purchasing power.
And so what can a regular person do? How can they protect themselves or help themselves?
They have to hustle. They have to maybe build an online business. They have to grow their income, and they have to have inflation hedges in place.
There we go. Let's talk about that, inflation hedges.
Okay. So inflation hedges, gold and silver, are normal inflation hedges. They're not investments though. So they're just for insurance, wealth preservation, and savings. So you can't save, because the goal of all these governments now is to weaken their currencies, and some of them are going to be weakening their currencies faster than others, but you can't save in the currencies long term. Anyway, you're not getting interest paid. You're not being paid any interest to save. So what's the point in saving in all these currencies?
Soon it might be negative interest. Someone to take your money.
Yep. Or they do what similar to what FDR, Franklin Delano Roosevelt, did in 1934, and they
Is he the president that took the gold as well? I think he was.
Yes, and he devalued the dollar. So not only did he take your gold, he also weakened the currency, devalued it against the dollar substantially. So it was a double whammy. Mm-hmm. Now, not everyone complied with that. Yeah,
I'm glad you brought up gold and silver as a hedge. Most people view it as an investment, which is not. The very notion of gold and silver is to hold your value as opposed to as an actual financial investment.
Well, the problem here in the US for Americans is the way gold and silver are taxed. So the government has already thought of this. They already realized that they were going to be devaluing the currency, and there is no tax advantages to buying gold and silver and holding it. You don't lock in. You
guys get capital gains tax, right?
Yes, it's this guy named Daniel Amerman. He did excellent DANIEL over the last 10 years. He's written excellent blog articles showing that when gold goes to 5,000 and silver goes to 150, 200, if you go to sell it, your tax bill is going to be enormous. So I think it's taxed as, I think, ordinary income. It's taxed as a collectible, which is taxed as ordinary income. So the higher it goes,
it's income. So it's not even capital gains.
Correct. You don't. So if you buy a stock here in the US and you hold it for at least a year. I think that's still the tax laws. You get to lock in long-term capital gains taxes. So if you trade stocks, you trade other types of assets, you don't get long-term capital gains taxes. The lowest tax on an asset you get is long-term capital gains taxes with buying and holding real estate here in the US and buying and holding stocks. And then you can lock in, I think, a 10% long-term capital gains tax rate. There is none of those benefits for gold and silver. My book, not an investment. Now, gold stocks are an investment. There are good gold stocks, and then there are really, really bad gold stocks.
I just had Jim Rickers on there, and he's really his only suggestion is physical gold, nothing but.
Well, here's the danger with that, Ameer. I know you love Bitcoin and cryptocurrencies, and I do own some. So for full disclosure, I own some Bitcoin, I own some Litecoin. I haven't been buying any lately, but I think it's really dangerous for anyone to go all in on any one thing, because we're in an environment now where the central bankers, the politicians, the bureaucrats with too much power in these different countries, they can be changing the rules all the time. So they can do tons of different rules changes. I only gave one example early in the interview about the special purpose vehicles, but if the banks are in trouble, they change the leverage ratios for the banks to make them look more solvent. They can do a ton of different rules changes. And that's the danger we're in. So if you have all of your asset, all of your net worth, or most of your net worth in just gold or silver, they can put an extra windfall profits tax. They can potentially put extra taxes on the gold miners or silver miners. They can, if you own a lot of Bitcoin or cryptocurrency, let's say you are smart and you have a Trezor or a Nano Ledger, right? You've taken it off of Coinbase. They can still, ex post facto, they can say anyone, because we saw you bought it on Coinbase, they can say that we know you have some, and that you're going to have to pay a capital gains windfall profits tax or something, because now Bitcoin, this is hypothetical, now Bitcoin's at $50,000.
Yeah.
And they could say
I lost, though, my ledger with my seed phrase, so I don't know where those things are at.
Well, you would know all the different storage options. There was cold storage with...
I got it into boat. I got into a boating accident, so I lost all my crypto.
You did? Are you kidding? I thought you had it all.
That's people have to figure that out. Boating accident. But okay, gold, silver as a hedge.
Okay, so one of the smartest hedge fund managers, Raoul Pal, he managed a lot of money at Goldman Sachs for a long time. He's rich. He started Real Vision TV, which
I love Real Vision. Yeah.
Yes. So he recently said, because all the rules changes, and this is a really smart guy, he pays attention to all the rules, he has a lot of experience. He said with his own personal net worth, 25% cash, so US dollars, in case the stock market crashes, and then he has cash for an opportunity in case of, let's say, rental properties in certain areas, maybe the Dallas metro area or Houston metro area. Let's say tens of thousands of oil jobs are lost after oil continues to go bust, and there's really good starter rental properties on sale. So he has cash, 25% of his net worth in cash for an opportunity. He has 25% in gold. I would probably have some gold stocks in there or silver stocks in there. He just has gold though, and then he has 25% Bitcoin and 25% for trading opportunities, because he likes to trade Monday through Friday. So that's what he has for his personal. But again, that example, he's not all in on any one thing. So he realizes the environment we're in, where you could have good investments or you could be short stocks, because 6 weeks ago, it was smart to short stocks.
Yep.
The stocks were crashing. But look at all the rules changes that President Trump is announcing. So the restaurant stocks were not included in Congress's initial coronavirus bailouts. And now President Trump was just doing press conferences talking about how people are going to be able to potentially deduct entire meal expenses or entertainment. So either if you order takeout or delivery from some of these restaurants now, you're going to be able to write the whole thing off. So this is rules changes with taxes, rules changes with taxes, rules changes with capital gains. And this is the environment we're in. It really sucks. The average person, it's going to give them a headache. And there's a lot of financial professionals I speak to who don't keep track of the rules changes, and they're directing people into only one or two asset classes. That's the danger of things right now.
Yeah. Also, we're entering a weird period of, you mentioned the Treasury and the Fed. We'll leave China out of this because I think there's a whole issue with supply chain around the world. And as you mentioned, inflation of products mainland. It's going to be interesting because in Canada, they're rolling out this semi-quasi welfare checks. It's convoluted. I always say in the government, they must have a department in the government that's like reverse logic department, because they never have any logic. It's like Jason and Ameer get in the room. It's like, how can we make the thing most complicated possible? And this is what we're going to give out to the people. And so United States, you guys have a stimulus check. I forget what it was, like $1,200, In Canada, it's this weird convoluted thing. You can get up to $2,000. Originally, they say it's for 4 months. It's going to go on much longer than 4 months. Politicians, premiers, senators are going to use that for voting privileges. We're entering a weird stage of this quasi UBI, almost very similar to, you can even call it communistic, socialistic properties, where I think our whole economy is going to be very skewed. And I think people really are going to underestimate, or they really don't understand that if I'm a betting man and I'm looking at everything we talked about Fed printing trillions of dollars, Fed having SPVs, buying out all these shit bonds, stuff happening in China, the milkshake theory we talked about. No matter what, all these data points are leading to great inflation.
Yes. Eventually great inflation. Now, if for now the dollar index is still pretty strong, and that's because all these dollar-denominated debts are defaulting, and you have these derivatives, these forward dollar swaps, which are, Ameer, when things break this bad in the global economy, like in 2008, it was over $5 trillion in derivatives. Mm-hmm. And so when housing prices fell, people fell upside down on their mortgages, it was $5 trillion on derivatives that mm-hmm. broke this system. So all the equity of all the US banks did not total $5 trillion. So the banking system was wiped out. All the rules were changed. They did these currency swaps, massive amounts of them. We found out about them from the one-time partial audit that Ron Paul got, that Bernie Sanders and John McCain both agreed to. And then there was a Bloomberg News Freedom of Information Act request, a 29,000 data dump document, and the Levy Institute went through it and found out that actually 29 trillion in emergency bailout loans was given out all over the globe by the Fed. And then the Fed afterwards waived a lot of the loans. So the loans were given out as temporary. A lot of people ended up not paying them back. The Fed bailed out their friends. The Fed picked winners and losers, whoever the Fed was most friends with. So China, look how China, with these currency swap press releases that came out, that were two of them, China didn't get any currency swaps. China didn't get any more dollars. Yeah, so you have the tug of war for now, where this dollar-denominated debt is imploding because the global economy is not sending those dollars to where they were needed. People had cash flow assumptions, and then you have these derivatives which are imploding, and that's why the dollar looks stable for now, because people are trying to figure out what's happening to the dollar, and the market's looking at both of these things, and the dollar's kind of stuck in the tug of war, and it's not moving too much right now.
Yeah. I don't know, man. I just feel sorry for how badly people are going to get fucked on taxes, man. And taxes being inflation as the number one tax.
Well, all the taxes, all the taxes are going to go up. I mean, Andrew Yang, he obviously isn't going to win the Democrat nomination. He's not going to be president. That doesn't mean his ideas are not going to be implemented. He was talking, you said universal basic income. I think that's for government dependence.
Of course.
Yes. So the more freebies that governments give out, the more dependent people become on government.
Well, I was looking more into, I've been diving more deeply into modern monetary theory, but not only on the economic side, but they have a whole section there to talk about guaranteed fucking jobs. I'm like, this is out of the fucking communist Marxist red handbook.
Yep. Yeah, I mean, here in the U.S. history, FDR did it too. Look at those make work programs that happened during the Great Depression. There's a lot of misinformation about what actually happened after the October 1929 stock market crash. So the narrative is that Herbert Hoover was this evil, greedy capitalist, this free marketeer. There wasn't enough regulation, and that's why the stock market crashed, and that's why the economy didn't recover when Herbert Hoover was still president. That's not the reality of the situation. There was an enormous amount of tinkering going on by all the different government agencies that were created at the time. President Herbert Hoover was putting in wage and price controls. Trump has talked now, this just came out and it's not guaranteed legislation yet, but he's talked, I think, about paying oil producers to not produce oil.
I saw that.
Yeah. But well, this is Ameer. This is right out of the playbook from right after the October 1929 stock market crash. So what did Herbert Hoover and FDR do? Farmers were paid to not send their produce, oranges and other crops. They were paid to let it die.
Yeah.
Very similar. History is repeating. The difference this time is there's a lot more currency out there, a lot more, and way more debt.
I think this is also going to be a precipice for the digitization of the dollar.
Well, I think there's a couple different camps, different power factions here in the Washington, D.C. metro area. I've been living outside Washington, D.C. now for metro and in New York City. So I think there's one camp that paid Nancy Pelosi to stick in that cashless society, digital dollar legislation into the Congress's coronavirus bailout. So I think that's one camp. I think that's probably backed by the Chinese government and then also the big tech companies in Silicon Valley. So I think that's what they want. They want that. That gives them, if people criticize the government or the wrong corporations like you and me, they can ding us. They can either tax us more for speaking up or criticizing, or they can shut down our credit cards or our bank accounts. So I think that's one faction. I think there's another faction that wants to maintain the status quo. And Jim Rickards, did you read his new book, Aftermath?
No, I didn't read it. It's actually sitting on my desk.
Okay. So I'll just summarize one of the key points. He talks about a discussion he had with Timothy, head of the New York Federal Reserve, and I think he was also Assistant Treasury Secretary. And Timothy Geithner says that they're just going to keep the same status quo system, or most of it. It's not going to change very much. So maybe they do some bailouts of the airlines, right? And then a couple of years later, the stock market's right back up when the economy gets back to somewhat close pre-coronavirus levels in a couple of years. And so they're just going to do all these temporary bailouts, and then the stocks are going to rally. The government's going to sell them off at a profit after they manipulate the stock market higher. And the government's just going to keep releasing, the U.S. government, since we have the world reserve currency still, is just going to keep releasing new press releases every day if they have to, guaranteeing bank accounts with the FDIC, guaranteeing corporations, certain industries, all this tinkering, all these guarantees. We know the government doesn't have the money, right? It's all inflation. It's all monetary inflation, right? They're creating it out of thin air. But the average person doesn't know what the Federal Reserve is, doesn't understand. And still, a lot of people still trust government, unfortunately, because they don't know how the system really works. A lot of people don't even know what the Federal Reserve is, what it does, or who's the Fed chairman. And those people, if the government, so the Federal Reserve or the Treasury, President Trump, different government agencies issue press releases saying, we guarantee everything. So there's nothing to worry about. So that percentage of people will go along to get along with that system, their herd mentality. So that's the other camp, is that this current system we have, which I don't like, I'm sure you don't like it either, many of your listeners don't like it. If they're buying gold and Bitcoin, they probably either don't like, they're buying insurance to protect themselves. So the second camp is that the second camp wants to maintain the status quo, and they will just issue all these press releases as guarantees with trillions of dollars that they may or may not print, and they may end up printing a lot more than people really know, because of all that off-balance sheets, all of that I need a water, all of that off-balance sheet shenanigans. And then what we know from 2008, how the real number, like I discussed earlier, it was not a couple $1 trillion like people think in 2008. It was not even 19 trillion, it was 29 trillion to save the system. And then the third camp is what Trump bringing in, what Judy Shelton, is some type of gold backing. So I think there's three camps in Washington, D.C. and New York City debating what the U.S.'s version of the financial system is going to be in the next couple years. So there's a big power struggle there. And I don't know who wins.
They're actually talking about bringing back the gold standard?
I don't know about a full gold standard, but maybe some type of partial fractional gold standard. So they would say that the currency is partially backed by gold. Maybe it's like similar to how U.S. citizens couldn't own gold, but they allow international exchange of gold. So so that wasn't a real gold standard. What FDR did in 1934, American citizens were banned from owning gold, but foreign governments could exchange their dollars for gold. So it was a partial international gold standard, not a real gold standard, because American citizens were screwed.
Yeah.
Yeah. So that is on the table. I don't think the gold group is winning right now. Let's just say that. I think the cashless society power struggle and the cashless society and the status quo are in the lead. So I think those are the two main factions now, and the third camp, the gold camp, from partial gold backing with a currency, I think they're far behind.
Yeah, there's also another player in here that's going to change how the perception of the digital dollar is. No matter what, I think no matter what, the Facebook Libra dollar will be launched, and it will use a basket of different currencies, forex currencies, whether it's the US dollar, the euro, the British pound, whatever. And this is going to open up 1 billion plus people in the world to the idea of a digital dollar. And this is going to be the precipice, kind of like the opening for people to get sucked up into this whole digital way of money.
Well, the government currencies are very, very different, because then they could track and tax every single transaction. If the government wants, they can put a value-added tax on all transactions very quickly. I don't know about immediately, but very quickly.
I think it's going to happen regardless, but I think this is also the opening for counter markets. This is where Bitcoin comes in. This is where cryptocurrency comes in. This is where the whole Web3 ecosystem comes in. And it's funny because, Bitcoin was born post 2008, and this is its first economic turmoil that it's facing. And it still has some correlation to the equities and S&P. They say so. But if you're comparing it to the stocks, it's a 24/7 free market. There's no breakers. There's no bailouts. Hardcore Austrian economics, supply and demand. There's 21 million, 3-4 million is lost, something like that. And it's holding up. It's holding up. And I think a lot of people who are intelligent, like yourself, and people who understand these very simple principles, I think people are going to flock in hordes within the crypto space.
Yeah, I think crypto is an interesting hedge. I don't have a lot of my money in it, but a lot of my savings in it. But it's really tough to say what the laws changes are going to be with governments, because we could see some governments going after that. I mean, in China, China's really tried to crack down on Bitcoin and cryptocurrencies a lot. They've been kicking the Bitcoin miners out of the country now for years.
But that actually benefits Bitcoin.
Oh, really? I'd like to hear that explanation, how that benefits.
At one point, it's quite centralized in China, miners, for the hash power. In fact, Canada is becoming more and more a big player because we're getting really cheap. You can get cheap-ass energy in Canada. Like some places I even saw 2.9 cents a kilowatt, and most places around the world around 6 cents a kilowatt. There's even places almost will give it to you free. They have like dirty natural gas in Alberta, but you have to have a license, and they're pretty much burning that anyways. If you can tap into the generators, you're pretty much getting free electricity. And so since Bitcoin is proof of work, so you need electricity, you need these miners. The miners have a half-life. They last, 8 months to a year and a half, depending on how frequently you use them, what type of miners you buy. The proof of work mechanism in Bitcoin has created the greatest manhunt for the cheapest, most efficient use of energy. And so people, because it's a margins game, right? You have all this overhead capital. You're like, I have to buy the machines. I have to rent that warehouse. I have to pay engineers. And my major cost is I have to pay energy per kilowatt per hour. And so there's people running around the world, different locations. Canada's a great location because these miners, they produce a lot of heat. You can go places in northern Alberta, northern Saskatchewan, northern British Columbia, and it's very cold there. And get this too, it's a 2-for-1. Since Canada has federalized weed, I know mining operations in Canada take the heat from the miners into a greenhouse and grow weed as well.
Oh, wow.
Yeah, it's a 2-for-1. You gotta cool the miners anyway, so might as well suck that heat into a greenhouse.
Now they need like a government rebate or subsidy now.
Yeah. And so like one of the biggest miners are in Quebec over here. It's Blockstream. It's like $100 million mining operation. So mining is actually becoming extremely decentralized around the world. And it's actually a good thing that a lot of these miners aren't in China anymore.
Oh, thank you for that. That was very interesting. I might have to re-listen to that again after this interview's over. That was a very interesting My favorite businesses with the highest margins that I've found on a publicly traded stock exchange are gold, precious metals, royalty, and streaming companies. So they don't actually mine. And their business model is actually set up similar to a rental property owner where they just collect checks and they finance mines and they take a very small portion of the revenues of a mine. And if there's exploration successes, these royalties or streams that they buy could run for 10, 20, 30, 40 years. Franco-Nevada, which is the largest royalty precious metal, over $16 billion market cap, $600 million per year in annual cash flows. They have over 100 assets online generating cash flow for them. They have royalties in their portfolio that have thrown off cash flow for over 40 years.
Really? Do you know the ticker?
FNV.
FNV.
So, yep. But there's a handful of these companies. So these companies, Franco-Nevada is the largest of them and most diversified with the cash flows. Franco-Nevada, I just lost my train of thought. We've been talking a long time. Franco-Nevada has 90% gross margins, and good luck trying to find a lot of businesses that have anything close to that. So this company,
90%.
Yes, 90%.
Wow.
So this company, they only have 40 people working at the company, and all they do is look for new deals. So they're looking for more growth. They're looking for more investments, looking for more cash flow. That's as an investment, that's one of the safest ways to get gold and silver exposure are with these larger royalty and streaming companies. As long as the management teams don't deviate from the business model or put too much debt on the balance sheet, use too much leverage, or do a string of bad deals in a row that puts with debt on the balance sheet. So those are really the only ways that management can actually screw it up. Otherwise, the business is unbelievably good at generating cash flow. And if the management team has some geologists or either on staff or hire some good consulting geologists, they can do these tiny little deals with junior miners, right? For $1 million or $2 million shares of some of these junior miners that everyone likes to speculate on, and they get a royalty. So they buy the equity, they buy the shares to help these junior miners so they can go drill on large land packages, and the royalty and streaming companies get a royalty on often the entire land package for forever. The royalties on the land for forever. So if the junior miner drills and that becomes a gold mine with 40 years of reserves, that tiny little $1 million speculative investment, that call optionality, that turns into a steady stream of cash flow now for 10, 20, 30, 40 years. And some of these
this is a dividend stock?
Franco-Nevada is a dividend stock. They're a more mature company. They re-IPO'd in 2007, and every year they increase dividends.
Wow. Did you hear Costco today? 8%?
Yep. Costs at my day job when I was a investment analyst and I was covering oil stocks and dividend stocks, I wrote a extensive article on Costco. This was 2013 when it was $110 a share. So, yep. So it's doing what it's supposed to do.
I love their business model, man. Their margins are so small, 1 to 2, but their model I love it.
Well, they generate all their free cash flow from memberships.
Membership, I know you have cash flow every day. It's a SaaS model, but in real life,
it's a win-win-win business model because the shareholders are benefiting, paid more money and have better benefits and have stock options if they stay there. Customers are happy because on a lot of items they feel like they're getting a good deal. Now, not everything's a good deal because some people don't need like a lot of ketchup in bulk or other things. But if you know what to buy there, you can really reduce your cost per unit. So I think like it's one of those few businesses out there that has win-win-win for shareholders, employees, investors, and management.
I'm surprised other industries haven't tried to do that, like physically, like creating something of a membership model like that.
Amazon Prime. What do you think? Amazon Prime is the online copycat of
online. Though I'm talking about offline. You know.
Yeah, it's really hard to do that because you're not going to make much money off the other. See, Costco does it at scale. And they have a proven brand name and they have good products there, and not smaller companies might not be able to negotiate with some of these larger other companies to get the deals Costco does.
I think clothing might have an option. So like you look at Zara, which is like a beast, like ridiculous size company, and they already have decently cheaper prices compared to their competitors. They pretty much rip off designer type of fashion and they make it on their own.
Yeah, I'm not familiar with Zara. I don't cover a lot of the retail companies. I did an interview with a hedge fund manager, Kevin Duffy of Baring Asset Management, and he's a hardcore contrarian. He's been shorting all the different bubbles now for 20 or 30 years, the tech stock bubble, 2008, and over the last couple of months, he was shorting that too. And he's actually in there buying some of these retail stocks now, where the bricks and mortars business is not obviously not doing. The stocks have totally cratered 90%, but they're actually selling online still.
Exactly. And plus, especially clothing. People always buy clothing. The funniest thing is, like, my family's from former Yugoslavia, and like everyone's poor over there. Well, you don't have middle class. You're either rich or you're poor. And people rather spend money on like fancy clothes than anything else because of a status symbol. It's the most fucked up thing you can possibly think about.
Interesting.
Yeah, because you don't have anything else. It's like, it's very like in your face. It's like, if you see me wearing it, this represents and symbolizes my status in society.
So it's just more than taking pride in your appearance.
It has nothing to do with pride at all. It's literally like making face. It's a theater, if I had to call it anything.
Any other questions you wanted to ask me, Ameer?
I think we covered a lot, man. I was going to ask a question about oil, but that's a whole different fucking podcast, the oil wars.
Yeah, I was an oil analyst, and I called the oil price crash. I was getting information from my friend who I've known for over a year, who was trapped inside Wuhan. So I was getting reports every day or two, really, really detailed stuff about how the Chinese economy was totally on lockdown way before it hit the news. And I was seeing the oil stocks, and I was watching the airline stocks and the cruise ship stocks, and I was saying there's no way these stocks should be that high when China shut down, the other parts of Asia are shutting down, and flights at that time, at the end of January, flights were being canceled to Asia. And I was just hearing that all these other business people were canceling. I was like, this is going to hurt the oil. China is the main demand driver for oil. Emerging markets in China's the main demand driver. This is not going to be, and I was already, as you know, earlier in the interview, bearish on the Chinese economy. I was covering a lot of this, that their economy was contracting pretty violently long before the coronavirus. So that was the last thing they needed. So I'm not a rocket scientist. I just do hard work, research, and then I try to do good analysis, combining the research.
Oh, I lost you.
Oh, you can.
No, you're back. Talking about analysis, like I said at the beginning of the interview, I think your content that you put out, you put a lot of work into it. Like both your free stuff that you have on YouTube, and I know you have a Patreon account. If people want to know more about you and look at your work, what's the best resource for them to check out?
The YouTube channel, which is free. And I've interviewed over 500 experts there on a lot of different topics. I've actually known Trace Meyer for many, many years, since 2009, before he ever owned a single Bitcoin. He was trying to tell me about, yeah. So I've known Trace Meyer for a long time, when he was just a lawyer, and he ran the website Run to Gold, and he wrote the book, The Great Credit Contraction. I was doing interviews with him then, like those are in the archives. I was still like learning how to do interviews and still reading and learning a lot on my own. So I'd like to think I've improved a lot. They could go to Wall Street for the YouTube channel. The website right now, there's some technical issues with it, but the YouTube channel is free. It's a lot of great content on there. WALLSTFORMAINST.com. And the Patreon is, I think it's a bargain. Other people have told me that it's an immense value. I only charge $5 a month.
Really? That's it? Oh, you got to put it up.
Yeah, there is really high level content and analysis there. I was warning people. I predicted the first major oil stock that would go bankrupt. I predicted it 2 months ago. Whiting Petroleum. There was an audio podcast end of January, first week of February, when I said that Whiting Petroleum would be probably the first oil company, major U.S. shale oil company, to go bankrupt. I was warning people to stay away from oil stocks. And there was a lot of other technical analysis chart work. I'm also a fundamental guy, so I do a lot of fundamental research with the company's balance sheet and cash flows, as people can probably tell from some of the stuff I was talking about during the interview. So there's a combination of things behind the paywall. It's only $5 a month. Again, I'm just trying to move a lot of the income that I was making before YouTube censorship. I mean, my channel's not really growing anymore. Moving that away from YouTube. And hopefully Patreon doesn't censor me. If not, I have to come up with another plan.
Direct, man. You don't need no middleman. Make a website. You can use a bunch of different software. It's member mouses. There's a million different software, plug and play, no coding necessary.
Well, I'm not very tech savvy, so I just focus on being a good financial analyst.
That's all you need. You don't need to be tech savvy. I'll help you out on that. That's all different. After the show, we'll talk about it. But guys, Jason, thank you so much for sharing. We covered so much today. Guys, if you're watching this or listening to this or wherever you are, go check out his channel. Go check out his Patreon. Listen, it's $5. Like it's like a cup of coffee now these days with inflation. And the knowledge is crazy, man. I've been following Jason for a while, and it's just the depth, like the girth and the depth of everything he covers is insane. Jason, once again, thank you so much.
You're welcome. Keep up the good work, man. You're doing a great job too.
Thank you.